everyone. So join me as we explore the vibrant tapestry of Nigerian scene, one event at a time.
All right, thank you so much for joining us. Well, according to figures we just saw from the Central Bank of Nigeria, most recent monthly economic report, total value of Nigeria's merchandise trade decreased to $7.9 billion in May 2025, down from $8.3 billion in April 2025 and $7.8 billion in the corresponding period of 2024, while the lower trade value month-on-month reflects broad weaknesses across both export and import trade activities. The decline was primarily driven by a 6% month-on-month decline in imports, trade to $3.3 billion. Similarly, export trade value fell 3% month-on-month to $4.6 billion. Despite the subdued trade performance, Nigeria recorded a trade surplus of $1.4 billion in May, slightly higher than $1.3 billion and $4 billion. That's about $400 million recorded in April 2025 and May 2024, respectively. Well, let's stay with this. And, of course, some other burning economic issues around the world of business, ranging from inflation figures, expected GDP figures, some geopolitical issues as they affect Nigeria, and, of course, projections for the last quarter of 2025. My guest is Mr. Johnson Chukwu. He is the Group Chief Executive Officer, Managing Director at Cowrie Assets Management Limited. Thank you so much, Mr. Chukwu. It's good to have you on the show.
Thank you, Tolu, for having me. Good day.
Mr. Chukwu, I think we should just do an overview first before we now move into maybe some specifics. We've seen inflation declining for some time. I've not had you on the show for some time to talk about your views around that. Yes, and we also expect GDP figures, and this as we move towards the end of the year. The price of PMS for me, I raised it to my first guest that spoke about the oil and gas segment. I am worried the fact that we are still seeing a bit of increase in the price of PMS. Nigerians are groaning, talking about the price of gas, the price of PMS, energy costs in general, and how all of this might affect inflation moving forward. What is your overview of the state of Nigeria's economy at this time?
Well, so I've maintained recently that we've seen some green shoots. We've seen Naira stabilize. I saw exchange rate around 1.1465 in one of the bank's platforms as the rate you can convert Naira to dollar today. So we've seen some level of stability. I appreciate local currency. We've seen inflation drop to 18.02% from about 20.12%. As it was in August. I mean, dropped to 18.02% in September. We've seen some level of stability in interest rates. In fact, we are seeing interest rate moderate, not just stability. We've seen treasury bills rate drop to the region of 16%, 15%, contrary to what we used to have about 18 to 23% interest rate. At this the treasury bills window. So if you look at inflation rate, you look at the exchange rate, you look at GDP growth rate, we saw a GDP growth rate about 4.23% in the second quarter of this year. All these things are pointers to improvement in economic condition. If you look at even the GDP report, you saw oil sector grew about 20%, which is quite contrary to what we have been in the past, which is showing that, look, on a year-on-year basis, we've seen improvement in crude oil production. So these are pointers to some improvements in the macroeconomic environment. If you ask me, I would say we are moving towards a more stable macroeconomic environment. We saw FATF, Financial Action Task Force, remove Nigeria from the grey list. That's also another green shoot. So all these things are indicators of an improving macroeconomic environment.
You just talked about the FATF, and I was going to go there too. Can you speak more on what that also implies for Nigeria's economy by removing our name from that list?
Okay, what you have to bear in mind that when your name is in the grey list of FATF, it's difficult for you to attract investors because it's seen that your country does not have the necessary regulatory or enforcement capability to ensure that money laundering, anti-money laundering, as well as counter-terrorist financing is fully implemented in your jurisdiction. So it's expected that your country acts as a conduit or kind of is lax in the control of anti-money laundering, money laundering activities and counter-terrorism financing activities. So these factors scare away or discourage investors from coming into investing in your country. So that could also explain, partly explain why in the first quarter of this year, total capital importation was only total foreign direct investment was only $126 million, and when we had over $5 billion of capital importation. So, which means at that point, investors did not have so much confidence in investing long term in the economy. But with our name being removed from the grey list of FATF, then it means that investors can actually say this country has a more stringent anti-money laundering and counter-terrorism regulation and enforcement. And it then means that the likelihood that money coming from the Nigerian banking system is fraud money or money laundering is minimized. And they will be more open to relate with our financial institutions, our banks. Investors will be more open to allow their monies to come into the country because Nigeria is no longer tagged as a country of interest by Financial Action Task Force.
Great stuff there now. So back to our conversation. Again, analysts like you have argued that, well, Nigeria seems to be getting the macro right, and I've asked this question over and over again. But the man on the street will still tell you that I'm yet to see what these numbers really mean to me, talking about putting food on my table and all of that. But I would also say, Mr. Chukwu, that we've sent correspondents out for market survey, and there's a bit of decline. The price of rice seems to be coming down. The price of tomatoes, some food stuff seems to be coming down. So does it mean that we are gradually getting there with regards to how all of this will start to trickle down to the man on the street?
Well, to bear in mind that we're at the peak of the harvest season. I mean, the New Yam, if you are coming from the southeast of the country, you will know that almost all the communities are celebrating New Yam Festival. So, so it then means that additional tubers have hit the market. Then rice, there's improvement in rice supply. So there is, and then there is food substitution. Some people who cannot afford rice are buying corn. There is corn everywhere. I'm sure you know that. I mean, maize. So there are a lot of food products that come out around this season. And normally you should expect some moderation in their prices because many of these things are perishable. Like you mentioned tomato. If you go to the market in the morning and order for a basket of tomato or a measure of tomato, the price you will get will be much higher than if you go back in the evening by 5 p.m. because the tomato sellers will want to just dispose of their stock for fear that it will get damaged or rotten by the time they come back to market. Instead of losing it entirely, they're going to drop their price. So because also we don't have a storage and preservation facilities, so food items that are highly perishable seem to drop materially in price at this period of harvest season. So that may not subsist when we get to the planting season. But that's not to take away the fact that we've seen moderation in prices, including corn inflation. We've seen a moderation in corn inflation, which is non-volatile food items and energy items. We've also seen moderation in those items. So I think because we have seen a stability in exchange rate, I did point out earlier that we saw exchange rate at some point was as high as 1,800 naira, dropped at just about below 1,500 naira. The impact of that is that we are seeing replacement costs of some goods in the shop floor dropping below their shelf price. So even those who are selling those goods, if they know that their fresh imports will land at a cost that is lower than their selling price, they will want to sell down or cut their profit margin so that they don't suffer losses. So those are factors that may be driving down prices. And I think as long as exchange rate continues to appreciate, we should expect some further improvement in inflation rate.
So moving a step further, you alluded to also the stability in our exchange market, which many have commended. I also like to ask a question around that too, Mr. Chukwu. As we move towards the end of the year, some are saying that we could see our currency change for as low as 1,400 if we continue at this pace, and maybe the CBN continues to supply the banks and everyone continues to get access to FX, and our reserves also continue to stay very strong the way they've stayed. I don't know what you make of that, and if you think that it's now appropriately priced, our currency.
Well, let me say this. Let me start from the first part of your question. I think it is possible that Naira could reach 1,400 Naira to $1 before the end of this year. Couple of positives. You did mention in your introductory comment that of our export and import of trading goods and services for May this year. Of course, we already have the figures for end of second quarter of this year. And the end of the second quarter of this year, the report shows that our total import was about 15 trillion naira, while our total export was about 22 trillion naira, giving us a positive balance of trade about 7 trillion naira. Added to the about 5 trillion naira positive balance of trade we got in the first quarter of this year. So you had about, at the end of the second quarter of this year, we had about 12 trillion naira in positive balance of trade. The implication of that is you flush into your reserve, and then that means your reserve will be stronger. And if that trajectory continues, and we continue to see improvement in crude oil production, it then means that our reserve will continue to grow, which gives the central bank a stronger war chest to intervene in the market, to stabilize the market, or to meet demand. And that continues, so you don't rule out the possibility Naira will get below 1,400 Naira before Christmas. Also, another contributory factor that could drive the strength further strength of Naira is the dirty December. A lot of accommodation spaces, hotel events are fully being booked now by Nigerians in diaspora and non-Nigerians who are coming to Nigeria for dirty December. I have a friend who is into hospitality business, and he told me that his facilities have been fully booked. So those guys are going to come in with foreign currencies, and they will exchange for Naira. So as they come in with foreign currency, including Nigerians who are coming home to celebrate Christmas with their families, that will mean that supply of foreign currency, dollar will improve further. And at that time, you will see minimal demand for FX because importers, traders no longer import, place orders in December. They all go on Christmas holiday. The orders for Christmas sales have already been placed. So I think those factors will possibly lead to further strengthening of Naira below even the 1,400 you mentioned.
So we could even see something lesser. That's what you mean? Wow. Because considering these factors you ruled out, clearly something might just change. But moving forward, now we've talked about food and all, but everyone will still talk about the impact of these reforms on still staying with the man on the streets. Do you think government has talked about figures being rolled out with regards to interventions and all of that? And even when IMF came up with the report before the World Bank IMF meeting, it was also highlighted the number of Nigerians being thrown into poverty, though Nigerian government has challenged that report. But all the same, we know that there is an impact of these reforms one way or the other. But in your own thoughts, what do you think can be done? Again, I would always like to ask this question that would definitely impact Nigerians. Some have talked about funding of university students under the NEL Fund project. Many have commended that. Many have talked about all of these schemes. But what do you think would directly impact the man on the streets? And he will believe that truly government is ready to address the fallout of these reforms.
Okay, so if you can hear me, just confirm that.
Loud and clear. Did you get my question?
Can you hear me?
Yes, I can.
Yes. Okay, so the basic thing we have to bear in mind that why the average man on the street is not feeling the impact or materially feeling the impact of improving macroeconomic conditions is because inflation at 18.02% is still high. Bear in mind that the basis of composing the 8% inflation was 33.12%, 18%. Average inflation last year was 33.18%. It then means in the past in 21 months, average prices have increased by over 50%, because if you add 33.18% to an inflation rate of 18.02%, you're going to have something like 51%. So an average household income ought to have increased by a minimum of 51% for them to begin to feel the impact of improving macroeconomic conditions. But I know that most households have not had that benefit. So what that means is that on average, most Nigerian households have had deterioration in their standard of living when you compare to where they were as of December 2023 to where they are as at now. And that's why when they say that the number of poor people have increased to 139 million, I think government should not focus on the dining. The government should focus on what do we need to improve that condition or change that narrative. And which takes me to the second part of your question. The key thing is that we need to turn this economy into a productive economy, that we create employment for households. It's only when you have employment that you now talk of your income increasing above the rate of inflation. But most households have, and we don't have full employment. So you find that in some instances, one person is feeding everybody, one person's income is what is going around the family of 5 or 6. So what we need to do is create a productive economy. And that will come about if we focus not just on the monetary policies and the macroeconomic variables as inflation, exchange rate, and all those things, and focus more on productivity. And that my approach would be, let's identify sectors of the economy that the government needs to incentivize to create employment. Today we have a telecommunication sector driven by incentives, government policy and incentives. We have a cement industry driven by policy incentives. And we need to replicate that in multiple sectors where we have competitive advantage. It's only when we have jobs that they will not be striving to work towards increasing their income above inflation rate. And for your standard of living to improve, only one factor is certain, and that is if your income increases above the rate at which price levels is increasing.
That's the only way out. Your outlook now for the last quarter, it's just few weeks, let me just say weeks to the end of the year.
Well, my outlook, looking at the variable that I measured, inflation rate, I think it will moderate further. I said earlier, when the harvest season, I also say that we expect a stronger naira, which will also contribute to reducing core inflation. So you have core inflation will moderate further, food inflation may even moderate further as we go to the deep of the harvest season. Of course, by the time we get to the next year, we'll go to planting season, and that could change. Then, in terms of economic performance, I think we may see a stronger GDP growth in the third quarter of this year, driven by improvement in crude oil prices. Of course, I understand there were distortions in September, but I think the other months may compensate for it. So we should expect further crude oil improvement in crude oil production, which will also flush into our balance of trade and also flush into our reserve. And so we should expect a stronger reserve. I think that's on the macro level. If you look at the financial services sector, I think we've seen a very strong equity performance, over 52%, 51% year to date. So we should expect that relatively strong equity market to be sustained throughout the year. I think interest rates are going to drop further. Central bank has become very conservative in its offer of yield on federal government treasury bills. So I think that will drop further. Similarly, I also expect, given all these variables, that the Monetary Policy Committee will further reduce monetary policy rate beyond 27%. Those are my outlooks on some of the key parameters.
Brilliant stuff. Group Chief Executive Officer, Managing Director, Carrier Assets Management Limited. Thank you so much, Mr. Chukwu, for joining us for the first edition of the show this week. We appreciate this.
Thank you for having me.
All right, then. Well, Well, it's time to review trading activities at the Exchange Limited, and let's see what we got today. The market is down. Well, but my guest is Mr. Jamiu Mohammed, who joins me for this conversation. Mr. Mohammed.